have a great group of panelists here. It's gonna be kind of an eclectic group, as we talked about earlier with them. They're very eclectic. And we're gonna talk on a lot of different topics. We're gonna talk about compliance. We're gonna talk about operations. We're gonna talk about the national direction of various things that these guys have interest in. We're gonna talk about leadership. And they're all gonna be combined into one. All of them do have a slant on compliance, I'll tell you that. And I'm going to start with Mr. Jordan here.
Hi, good morning. Is this thing on?
Yeah.
I just have one initial observation before I introduce myself. But I think, Chuck, your deal started this morning at what, 8:30, and the place was packed. I'm not sure if we're bringing the collective IQ down or something. But anyway, my name is Steve Jordan. I'm the Executive Vice President of the National Independent Automobile Dealers Association. And for those of you who don't know me or know my background, I used to be a buy here, pay here dealer with the J.D. Byrider franchise in Tallahassee, Florida. I was a part of a dealer group. As a matter of fact, Bill Bauer, who financed us and is still financing my partners there. So for me, it's an interesting kind of dynamic to be the head of the dealer association representing used car dealers as having been a dealer for a number of years. So people ask me, what's it like being in the association side, on the association side of the business now and no longer running dealerships? And I said, it's a great way to be in the car business, but not in the car business, if you know what I mean. So anyway, that's a little bit about my background. Before I got into the car business, I was in the political world. I managed campaigns. And before that was the Deputy National Field Director for a national political organization. So for me, it's kind of the perfect opportunity to blend my background in both automotive experience, campaigns, lobbying, and wake up every day representing dealers like you sitting in this room. So a little bit about me. I don't want to take up all the time. I want to introduce the rest of the eye candy up here on the panel.
That's what they call me, eye candy. But anyway, my name is Keith Hagler. I am your president of your national association, NIADA. I'm proud to be that. I'm a strong believer in associations. I think I'm stronger now than I've ever been just because of all the issues we've kind of coming down from DC as well as state issues. I've been in the buy here, pay here business for over 25 years, so there's always been this thought out there that maybe NIADA was not representing the buy here, pay here business that strong. That is not right. That is wrong now. We've had, I guess, 3 now presidents of NIADA that are buy here, pay here dealers. So we're very strong in buy here, pay here. And it's just been an honor to be able to serve as your president. I'm glad to be here today to talk about issues that are going on. There's a lot of issues out there that we need to talk about. And I'll pass it on to Steve.
Hello, my name is Michael Thomason. I'm a car dealer also, like most of you out there, I'm sure. Today I'm here representing CAFA. CAFA is a Community Auto Finance Association. I'm also a big association guy. I'm also the president of the Texas Association, the TIDA. So mainly that means they didn't know what to do with me, so they gave me the job as president. So, but I am here today kind of representing CAFA and the CAFA story. I don't know if everybody has heard the CAFA story or not, but CAFA was formed in 2010. Right after the CFPB kind of became the agency that they're becoming, mainly because we felt at that time that the voice for the buy here, pay here dealer had not been the primary goal that was out there. We had a lot of discussions around that, and so I think there was 10 or 11 dealers that started that program, CAFA, mainly to give a proactive voice to national regulators. We wanted a seat at the table. We were able to get that seat in front of the CFPB and the FTC. We had very good relationships with them. Now we're up here talking with NIADA and all that. So what's happening now with CAFA is, and something that we've always wanted to happen, we feel like that the best plan out there would be have one unified voice. We were not able to get that before. The goal going forward for CAFA and hopefully NIADA will be somehow to reach that, to have one unified voice. We hope CAFA stays we believe that CAFA will be a viable choice there. We have, again, this is not an adversarial relationship. Nobody's going to get in a fight here. This is not a Jerry Springer show. I guess we could turn it into it.
We just need a couple of paternity tests. And then
but that's my role here today.
My name is Chuck Bonanno, and I'm the president of Nothing. I can only tell you that I will be sharing with them and with you all my observations as it pertains to state and federal compliance issues and what's happening in the dealership world and some of the concerns that I have. Am I a firm believer in being part of the associations? Well, let's see. My partner Chris founded CAFA. He's now the president of FIADA, the Florida Independent Dealers Association. And way back when I started in Buy Here, Pay Here, my brother-in-law was the president of FIADA. So I didn't know there was a way to not be a part of an association. This is literally so. And I'm going to share with you guys from a dealer standpoint. The one thing that I do profess and preach out there in the world to dealers, and it's hard because I see you guys, and you're the best of the best already, and a lot of you guys are already involved. But, I told you how wonderful the Buy Here, Pay Here business is this morning. Keep in mind, it's given you a wonderful life, great living, great future for your family and your children in there. And I would not say please volunteer. I would say you owe it to be involved. And just keep that in mind, because without the few people who actually do all the work, nothing happens, or unfortunately sometimes bad things happen.
That's right. Okay, well, a little bit about this panel. When we started putting it together, one of the things that we were considering was discussing the relationship between CAFA and NIADA. And I think there's a recent situation where it shows how CAFA, a group of dealers who are interested in protecting the interest of Buy Here, Pay Here dealers, and NIADA worked very, very well together to accomplish a great goal. Steve, would you like to talk about that?
Yeah, I think it's also important to understand too, just from a matter of transitional perspective, before I started as the executive vice president within NIADA, as I mentioned, I was a car dealer for a number of years, but also I was the chief operating officer at NIADA, got to work very closely with the leadership at NIADA. And even before that, I was the executive director and CEO of the Florida Independent Auto Dealers Association. So I've seen a lot of the history of the association over the last several years and the transition that has taken place at the highest levels of the organization. And I'll tell you, one of the things that I've heard a lot of over the last several years, and it's no fault of any one person, is that, we felt like, dealers feel like, maybe, the voices that we have as dealers aren't really being heard that well through the NIADA mechanism or the NIADA structure. And I'm here to tell you, as the executive vice president of NIADA, nothing could be further from the truth. We have a great need for wanting people to be more involved, and we're looking for more participation among our dealers and not less. And I think it's important to understand that the NIADA is an association of dealers that's led by dealers. Keith is our president this year. Michael T. is the president of our Texas Association. And since 1946, between the NIADA and our state associations, we've represented the voice of the independent car dealer in local communities, in state capitals, in Washington, D.C., before federal regulators. So we have the existing infrastructure. What we need is more participation of our dealers to be more involved and to be more active. And now more than ever, with the the growth of the CFPB and they're still trying to figure out a lot of things. And we were talking about this earlier. The CFPB is really they're still trying to figure out their short and long-term strategies, and they're really just now kind of flipping the lights on, organizationally speaking. So I think the first thing is just know that we are starving for your input, we want your input, and that the association isn't being run by just one or two people. It's a group of dealers, it's a group of committees, it's a group of our state associations, and we want you to be more involved. So that, but also to Alan's point, one of the things that I think we've learned over the last couple of years, specifically relating to how we can all kind of work together, was in the California deal. How many of y'all watched what happened out in California last year with Senate Bill 941 and some of the other deals? Well, we collectively got together and kind of galvanized around the table to put a strategy together to fight that battle. And specifically, there were 3 Senate bills. Well, there was 1 Senate bill and 2 House bills, Assembly bills specifically. But there were 3 bills that were pending in the California legislature. And Senate Bill 946 ultimately got vetoed because of the collective efforts of the people sitting around this table and others. I know Ken Schulson with NABD was a part of that deal. We had leadership from Drive Time, we had leadership from JD Byrider, from Car Hop, and a number of other significant buy here, pay here entities, all working around the table to fight this deal. And ultimately, Governor Brown vetoed that bill at the last minute in the 11th hour. But if it wasn't for those efforts of us collectively working together, California buy here, pay here dealers would be capped at an interest rate of 17% plus the Fed rate. They would be required to sit on an account that's delinquent by 11 days before you can send it out for repo. And when you did send it out for repo, you would have to do that through a licensed repossession agency. So those are just a handful of the provisions that bill would have invoked on buy here, pay here dealers in the state of California that arguably the collective voices sitting around this table helped shut down. And it was in large part because of the efforts that we put together there on the ground. So I think that's just a good snapshot of what we can all do together when we are working together and not independent of each other.
Yeah, go ahead.
Yeah, and I'd like to thank Gus Camacho. He was a huge part of California. But I think that shows right there as dealers when we work together what we can get done. Because I know I've been in the business for over 25 years, and so I've never seen regulators come in our business like they have today. And I plan on hopefully passing my business down to my children someday, so if they'll take it. But anyway, but that is my plan. I want to make sure there's a business there, because if it wasn't for this industry, I would not be where I am today. The buy here, pay here's made me who I am. And but I think it's just so important that dealers that we get involved. I understand we're busy and we got things, and Mike and myself, we're busy guys, but I think we both know how important it is to give back to the industry that's made us where we are today. And so it's so hard sometimes to get people involved, and especially on what Steve was saying at NIADA, the dealers control NIADA. That's what it's all about. It's the staff. I'm an elected official, but we are your voice. And so we want to get more and more dealers involved to hear what's going on and all that. And I've just seen in Texas what we've been able to accomplish there. And I've seen some of those bills come through that a lot of dealers never see these bills because we kill them before they hear about them. But if they, I mean, it's unreal what goes out there. But that's where CAFA, NIADA, your state associations, that we get it to where those guys that are making those bills come ask us questions before they do the bill to find out, does it make sense? And that's the part we're trying to get at, is where they talk to us and ask us before they actually present these bills. Sometimes they really make sense in our business.
Well, I would, certainly agree with with things that are being set up here. I will also say that it's a refreshing tone to hear that we're working together and that we're asking for dealers' input from that level. That's fantastic. I think that's great for the future of all of our associations. But CAFA was born because the buy here, pay here people did not think that we had a voice at NIADA, and we were asked not to have a voice at NIADA. So our first approach was to go to them because we felt like they were our association, and that's where we should go, and that's who should be fighting our fight. Love the guys to death. It didn't happen quite as the way that we drew it up on the board. I think CAFA has effectively changed some of those attitudes. I think that's why if you're not a member of CAFA, you should be a member of CAFA, because car business is used. There's franchise guys, there's retail guys, there's buy here, pay here guys, there's wholesalers. And all these regulations that are coming are going to affect every one of those industries differently. What we're concerned about is the buy here, pay here business. And I totally agree with Keith. And you know, why do you get? People say, why do you get involved? How did you get involved? Well, it's not because I necessarily want to be. I'd rather be playing golf today, actually, but I need to be involved. I have to be involved. We're in our business. Our business has been around since the early 70s. We're in our second generation. We're trying to pass our business on to our third generation. Hopefully my grandkids will be the fourth generation coming into our business. So I want to leave a strong industry. I've had a great run for 32 years. I'm ready for it to go another 32. But we've all wanted to fly under the radar in the past. We've all had a pretty comfortable living doing that. But the radar has gotten tighter
Hi, I'm Steve.
I'm sorry. I had a senior moment. I call it a brain fart, but I'm not sure that that's appropriate. So to Steve's point, the CFPB is kind of just turning the lights on. The problem with that is they're scatter shooting. They don't know what they're looking for, so they're just looking for everything. The idea behind the CIDs that they gave to all the biggest dealers, well, they're just fishing. They're trying to figure out our business. They don't know about us. They asked him the question in a meeting recently. Well, what is this buy here, pay here business all about? Well, you know, we just sell most of the cars that are being sold in the United States. You know, if people need transportation to get to their jobs, they're coming to us. So we have to be aware that they may not know much about us, but they have the power over us. And do we want to sit at that table? When they're writing rules, do we want to? That's why we need to be involved. That's why every one of y'all need to be involved. It's coming. Like it or not, you cannot fly under the radar any longer. We're probably preaching to the choir because you're already here and you want to be the best at it. It's the guys out there in the world that don't really care. They're the people that said, hey, what is this ID bill that just got passed in Texas? Well, we've only been working on that for 2 years. You know, where have you been? Nobody's in touch. They're waiting for it's the, whatever it is, the Peter Principle, the 80-20 rule. 20% of us are going to take care of the rest of it. So accept it, be what it is, get involved. We need people, we need money, we need action, we need help.
I know, Chuck, that you see a lot of dealerships, and most of the ones that are involved in 20 groups tend to be a little more, I don't know, aware. But when you see them, do you find a lot of repeat offenders or people who, you know, consistently do things that you are just baffled by?
Well, one of the things, Alan, that I do, and I do a lot of my on-site and my consulting, is with still the best of the best, the guys who are involved with associations. So when I go in there, I mean, it's obviously the simple things, you know, pulling deal jackets and seeing, you know, mistake after mistake, omission after omission. It goes on and on and on. And some of those things we try to clear out through some policies and some controls. But I'm probably most concerned with And I don't know if it's a car dealer, entrepreneur, independent, small business person attitude, but I hear a lot of people debating me, common sense, common sense, common sense. I should be able to do this. I said, but you don't and you can't, and it's the law. And when they take you to prison, that won't hold up very well in court. But it doesn't make any sense, or I should be able to do it. And I'm stunned by the things I see out there in that world. And the other one is that I think the ID law in Texas is a perfect example of that. If I hear one more dealer say, Chuck, it will never happen here. I mean, that's head in the sand. People don't come up with a lot of new ideas in the world. They look to the other states to see what they're doing, and then we're going to copy them. So I think I think it's foolish to think that it won't happen in Texas because it's a business-friendly or a car dealer-friendly state. I think you need to be sure that you're part of that process out there. And it really is your duty to be compliant. You know, it is as a business person. It don't just take the word, you know, I mean, I love Alan, but if you say, oh, I'm pretty sure Alan probably had those forms checked out by Hudson Cook. You need to ask Alan that these are compliant forms for your state. I mean, that's your duty. And you don't write forms in your dealership just because, here's a fun thing we have a customer fill out without an attorney looking at that. The thing that I found that through IRS audits and state level audits out there, and we will see what happens with CFPB audits, is they're going to look for patterns of misbehaving. Or did you send out this notice, or did you do the 10-day letter like in the state of Florida the right way? When you say, well, I don't have any of those forms, it's going to be really hard to debate that you're doing it right. Now, am I going to make an error? I'm pretty sure. Am I go to my dealership and say, are our forms and our deal jackets all compliant? I'm probably not going to take that bet. But we darn sure are trying, and so you have to ask yourself, do we have a compliance officer? Do we have a compliance, or have we done compliance audits, and are we doing them regularly? Because the world changes out there. And that head in the sand saying, no, it won't affect me, is really kind of scary. And this actually happened in Jacksonville recently, to the point that Steve and Keith made, and Alan, is I'm so used to dealing with the best of the best that I had a dealer that I had befriended a long time ago in the city of Jacksonville, Florida, and he is truly, truly old school. I mean, I think they use a big guy named Bubba, and they bang on the door with shotguns to get payments kind of guy. And he got into a long dissertation about his customers, and we're a mixed company here, plus we're up on a panel being recorded, but the things that he said were so shocking about what he thought about his customers, and I thought, you know, maybe I'm foolish and think that everybody's like these guys, and maybe everyone's like that guy. And then you come down to the realization that, you know what, and if an agency, state level or federal level is going to shut him down, so be it. I mean, I really have gotten to the point, I sleep well at night saying, because that can't be representative of what we are.
No, and I think that's right, and that's actually one of the things that the California conversation really kind of taught us as an industry, is we started sitting around the table talking about, okay, well, as an industry, what is our tolerance for, you know, requiring, if the legislature is going to come in and require, you know, every buy here, pay here dealer in the state, you know, provide a 3-month warranty or a 3,000-mile warranty or a 3-day warranty or, you know, what have you, what's the tolerance as an industry to get behind stuff like that? So, again, without having gone through that exercise in California, I think we would have, you know, we'd still kind of be kicking around in the dark. But instead of talking about, and I know learning from what we've done together in the past and in California is hugely important, and I think can help springboard us into what we're doing in the future. I do want to talk a little bit about what NIADA is working on in the future and going forward to buttress what we've done with our buy here, pay here dealers. And, you know, from a big tent perspective, you know, NIADA represents all independent auto dealers, not just buy here, pay here, not just retail, wholesalers. We represent auctions. So we're kind of the big tent. You know, the Republican Party or the Democratic Party, you got the right wing, you got the left wing, you got the middle of the aisle guys. We represent all of them. But buy here, pay here, as you all know, is such a hugely growing part of the industry, where, according to some of our own recent data, as many as more than 80% of licensed independent dealers that sell more than 10 cars a month are doing some kind of buy here, pay here. It may not be 100% of what you do, but you may do 1 or 2 or 5 or 10 deals a month that are buy here, pay here. So it's a blurred line these days in terms of, well, how many buy here, pay here dealers are out there, and how many, how does that compare over here? But and I want to talk a little bit about the conversations we just had with the CFPB 2 weeks ago. But before I do that, I do want to talk about the National Leadership Conference that we have coming up this November. For those of you who don't know, the NIADA, I mean, we're a federated trade association, which means we have 46 state-affiliated offices and associations, like the one we have here in Texas, Florida, Georgia, Alabama, Ohio, Oklahoma, Louisiana, California, Oregon, Washington, Nevada, the whole deal. So we have 46 state-associated offices that primarily focus on issues at the state level. As the NIADA goes, we primarily focus on things that are happening at the national level. So once a year, we bring all of our association leadership together, whether you're the state executive director that's the paid association manager for that state, and your elected officers for that state association. So every association is governed by a board that has elected officers. You can run to be on those boards, you can be involved. But once a year, we bring all those leaders together for association training, and it's been 15 years or so. I'm not exactly sure on the year, but it's been 15 years or so since the NIADA has brought its group of leaders together in Washington, D.C. And for the first time in 15 years, that's what we're doing this November. November 11th, 12th, and the 13th, we're inviting all of our national leadership for their traditional annual, training and collective meetings. But we're augmenting that national leadership training this year with regulatory updates from, so we've got confirmed directors and leaders from the FTC, from the CFPB, from NIADA, from the National Highway Traffic Safety Administration. We asked the IRS to come, but they said they couldn't come. We didn't really care. Anytime you can take a punch out at the IRS, you want to do it. So we've got a veritable alphabet soup of regulatory agencies coming over to address our group to talk about what's going on in the industry. Talk about things that we need to be aware of, including, again, members and directors from the CFPB, which I'm going to come back to in a second. But in addition to that, we're going to turn it into a day on the Hill. We're going to lobby Congress. We're going to lobby the House in the morning. Then we're going to have a packed fundraiser lunch that afternoon with Congressman Joe Barton, who is actually the congressional member from Texas District 6 here. He's going to come and speak. We've got 2 other congressmen that are going to come and talk to us. One of them is Mike Kelly, Pennsylvania 3, who's a member of the Auto Caucus. And for those of you who don't know, there are 7 dealers that are elected officials in the House of Representatives at this very moment. So there's a great kind of foothold that we have in Congress with these 7 dealers who are also elected officials, and Mike Kelly from Pennsylvania 3 is one of them. And there's a complete auto caucus that's made up of about 42 congressmen that we are working closely with. But as we were talking about earlier, lobbying and creating relationships with these federal regulators and key elected officials isn't a one and done thing. I mean, it's a constant, ever-present initiative that we at the NIADA have sustained and are growing over time. And in my personal opinion, the single biggest initiative that any trade association has, specifically the NIADA, it is to represent the voice of independent auto dealers before our Congress, before our regulatory agencies, and before our elected officials who are making policy and passing laws that will affect your day-to-day operations. So the absence of that is unacceptable. And that's why I'm actually really excited about my position, because I get it. I've been a buy here, pay here dealer. I've had to hire people. I've had to fire people. I've had to manage our bank line. I've had to manage, skyrocketing delinquency. I've had to manage the sales process. I've had to do it all, and it's a very nuanced conversation that you have to have with the regulatory agencies, because they don't get it. And getting back to the meeting that we just had with the CFPB, 2 weeks ago, we sat down with the CFPB and the FTC and a couple other regulatory meetings and congressional staff meetings. But the CFPB just hired a new director. He's an assistant director, and I can't remember his exact title, but he's a pretty important guy. He reports directly to Cordray, Richard Cordray, who is the director. And his purpose is to manage communications and relationships between the CFPB and trade associations, banking institutions, policymakers, and people who are affected directly by the regulations that are being promulgated by the CFPB. So we met with this guy who's been on the ground for probably a month now, and we sat down and we're talking to him, and I'm introducing ourselves and talking about the NIADA, and I said, and I'll tell you, one of the biggest concerns that a lot of our buy here, pay here dealers have is, some of the unknowns surrounding what the CFPB is doing, where you're going, the compliance issues. And so we started talking about it, and he says, look, I've heard of the NIADA, it's great to meet you guys, I appreciate you coming in, but tell me a little, you said buy here, buy here, pay here thing? What is that? Just talk to me a little bit about that. So I had the opportunity to just give him the basic, 90-second or 10 minutes Cliff Notes version of the basic framework of buy here, pay here. And again, that's not to suggest that the CFPB doesn't understand buy here, pay here, because they do. They have a number of people on staff that are trying to identify buy here, pay here numbers. They're trying to identify, large market participants, small market participants. They understand it. In this particular case, because they are, in a large degree, still trying to turn the lights on and figure out how to meet their congressional objectives, the guy that they've hired to interact with trade associations has zero understanding of the buy here, pay here space. So that's why it's important that we continue to do what we're doing at the NIADA through our lobbyists, through our lobbying efforts, through Sean Peterson, who's our regulatory outside counsel on that. But when you started talking about the CFPB, I mean, that's a real-time deal where these guys are still trying to figure a lot of stuff out.
I'd like to add to that. One thing is I'm real excited about this leadership conference, and like Steve was saying, what is buy here, pay here? Well, I want to let them see what a buy here, pay here dealer looks like, And I think we need to get that out there. I wish we had somebody here today and to see how professional we are, that this is a real business, that it's not some of the ones that Chuck's talking about, that we're very professional. So I think we need to get in front of them and let them see who we are, and that we are small businesses, big businesses, and we're doing business every day. The second thing is they scare me to death. I'm serious. My biggest fear is being regulated out of business. I can deal with subprime. I can deal with high car costs. I've been through it 25 years, and I've pretty much seen a lot of it all and made it through it. So I can deal with that. But as far as being regulated out of business, what is compliance? And that's what I keep asking. What is compliance? Tell me exactly what it is. What does it look like? And what is it, so I know the rules to go by. We don't even know that, so we're working all that out. So that part, I have a big fear factor. And then the third thing is I know we're independent, and sometimes that word independent is not good for us because we're independent dealers. Guys, we've got to rally around this. We've got to come together, and we've got to stay together. This isn't okay, let's just get through this. This is going to be forever, that we're going to have this stuff coming down from D.C. and our states and through our Attorney General's office. So we've got to know what the rules are. We've got to be at the forefront, be in front of them when they're making the rules. So this is just, I'm telling you, I've been around a long time, and this scares me to death. So guys, we have got to rally together.
Well, and to your point on the compliance deal, you know, in our meeting, in our most recent meeting with the CFPB, they had a number of people around the table, and that was one of the questions we asked them was about compliance and kind of their perspective. And they've issued a number of guidance documents recently that can give a little bit of an inside tell as to what they're thinking. But when they're asked directly, well, what can a dealer do to kind of mitigate, you know, a CID or mitigate, you know, having somebody from the CFPB come and snoop around and ask for documents and those kind of things? What should we tell them? You know, what should we tell our, you know, what is your message back to dealers from the CFPB? And as it relates specifically to compliance, they really don't have an idea of how to even define compliance. What we were told was, look, what we're looking for, just kind of conceptually in broad strokes, is there a pattern of behavior that would suggest you're taking advantage of your consumers and putting your consumer or your customer in a debt cycle that, that has no end in sight, that is based on your ability to make money. So in other words, if you're putting your customer in a financial arrangement that the only way you're able to make money in that arrangement is to keep them in a perpetual debt cycle, that's going to be a problem. So a pattern of behavior that seeks to take advantage of the consumer. But the other kind of mitigating factor too is, okay, if we are in a dealership or if we're in a business, one of the questions we're going to ask is, well, what have you done as a dealer to make sure you are in compliance? You know, show us what kind of, you know, what kind of training have you gone through? As a dealer principal, what kind of training have you gone through? But the people who are running your day-to-day operations, your sales guys, your finance managers, your collection staff, your repo guys, all across the board, show us what you're doing to keep those guys in compliance as well. And based on your answer to that, that will determine, you know, some of their, you know, next course of action and even possibly the severity of, you know, what they would do next or what they would ask. And in fairness, I think at this point, because they are still trying to figure out, you know, details on large market participants, smaller market participants, the auto industry and the buy here, pay here space specifically isn't a huge priority for them, but it is coming. And I think that is something that we all need to be aware of, just so that you can be in compliance. And if you're looking around thinking, well, you know, what do I do? What have I done for compliance? Or, you know, I would encourage you, the first thing you have to do is identify who your compliance manager in your building or in your dealerships is. And if you're looking around and you don't know who your compliance manager is or your compliance advocate, well, guess what? You're it. And not having one isn't an answer and isn't really going to ingratiate you when a federal regulatory agency starts nosing around your deal jackets. Not having a compliance officer isn't the answer. So we were kind of laughing about this earlier, even though they don't really know what the definition of compliance is, it's kind of like pornography. I can't really define it, but I know it when I see it. So compliance is kind of the same deal. It's kind of obscure. It's kind of a nebulous thing, but you have to at least show that you're trying to be compliant, and then, you know, make sure your employees are compliant as well. So looks like we have a couple of questions.
I just have one, because we keep talking about the 80-20 rule and the wonderful dealers that are at these conferences. I believe that, and I've led several, we've co-chaired class action lawsuits.
We've chaired class action lawsuits for dealers in Texas. We put a lot of work into that, so I appreciate CAFA and all the work that you're doing. My question is, when are we as an industry going to start putting the regulation on ourselves, on our own dealers, so that we can go to CFPB, the FTC, OCC and say, hey, our dealers are all educated dealers. They've been through a class. They are, and if you are a repeat offender, your license is full. Not, oh, well, okay, 50% are good, 50% are bad. That's why we have people poking around. That's why we have all the regulators looking at us. Not for you dealers up on the panel, not for most of these dealers here, right? It's not those that are the problem. It's the ones that are still writing 10% add-on and multiplying it times the balance and handwriting that interest, thinking that's an interest rate, right? There's people dividing their contract by a number of months, and there's just so much that we've seen, and so many people non-compliant when we were representing just the Texas dealers, and we only had 15 or 20 dealers. I'm telling you right now, it's scary. It is scary what some of the dealers are doing, and the CFPB has a right and should be in there. Chuck, like you said, they should be closing them down. But we, as an industry, should not be waiting for CFPB to close them down. We, at our levels, at the national and independents, we should be taking away their license. We should be setting up parameters and say, if you're a repeat offender and if you're doing these things wrong, you don't have a dealer's license, we don't want you in our industry, right?
Right.
So what can we do for that? What can we do about that?
Unfortunately, we don't control the licensing process. That's number one problem. So one of the ways to do that is, how does our industry go about telling the public what is a good dealer? What's a responsible dealer look like? And one of those voices, or one of those ways of doing that is to coming up with those standardized, but it merely is a suggestion. We really have no control over the licensing process. That's a state-driven thing. We've tried to change that in Texas, where we're required to have education and continuing education, but we've not been successful yet. I believe that we will be successful. One avenue is to say, here's what a good dealer looks like. He does these 5 things. Those are suggestions. Another way that we talked with, one of our talks with Rick Hackett, who at the time was the fellow at the CFPB over our industry, was how can we get them to help us at our state level put more pressure on our legislators to pass education requirements. You have to be educated to be a shampoo girl in the salon. You have to have a license for that. And you have to go through continuing education for that. As far as I know, most industries do, but for whatever reason, we can't get that done here in Texas. And believe me, all the people here in Texas, Keith has been involved for many, many years. We've been involved many years. We can't get over the hump there. That's kind of a defeatist attitude, because every year we go back and do it again. And we're trying to figure out ways to just write it in the rules. But if we had control of that, it'd be great.
Well, and it definitely takes time. I can tell you on a national level, there's 20 states that require pre-licensing education before you even can apply to become a dealer with your DMV or whoever the licensing agency is in the state. 20 states require you to have at least 8 to 16 hours of pre-licensing education, and only 11 of those states require any kind of continued education. So I think that's part of the answer. I don't know that that's the whole answer, but I think what you're going to find in the industry over the next several years is a growing divide between those who do the right thing and those that don't. I think over time you're going to start seeing a lot of the smaller guys just going away.
So that is actually one of the things that we're working on at CAFA is, what does a good dealer look like? If he's going to be compliant. He's going to walk on his lot and he's going to have all of his FTC stickers. He's probably going to offer you some sort of warranty. All those kind of things that everyone seems scared about the CFPB to come down, oh, you must give a 30-day warranty. You're all doing 30-day warranties with your customers anyway. You're fixing them after they buy the cars. Why not give them the bang for the buck and give them the warranty? A good dealer does those things. Yeah. So those are just a few of the things that we're working on at CAFA.
Is the 30-day warranty only in Texas? Because in Arizona we do 15 days or 500 miles of truck first.
I did not.
In Texas, is it only 30 days? Is that just here in Texas?
There's no requirement for a warranty in Texas.
He's just using that for an example.
Just saying that a good dealer, that may be one of those things that you can say, hey, the good dealer is going to give you a warranty.
So I got a couple things I want to ask real quick. Okay, I asked this question in a leasing class. So if you were in there, then whatever. How many of you have errors and omissions coverage? Not a lot. That's not good. Because one lawsuit, you're out of business. One big one. Even if you have errors and omissions coverage, how many of you have talked to your attorneys and had them read your policies to make sure you're covered for government reviews like CIDs? None of you.
Well, we got one.
One?
We got one early adopter.
Very, very few. And very few policies allow for it. So one CID, you're done. And the CIDs, they're sitting out, the CFPB sitting out, they're real nebulous, they're real broad. There is a lender, I heard, that has actually challenged that CID and is actually suing on behalf of that to make them narrow the scope of that CID. But that is something for you to consider. If you don't have errors and omissions coverage, you make errors. You forget things. I mean, it just happens. You need some coverage to protect yourself on a long-term basis in the event something like that happens. It's not crazy expensive. You can do that. I have another question for you. How many of you would spend $500 a month to some association or some entity to guarantee, if you knew it was guaranteed, that they would protect your interests? How many of you would spend $500 a month? Now, what's interesting about that comment is that traditionally with car dealers, I know when I've talked to them in the 22 years I've been doing this, they only respond to one thing: fear. So what ends up happening is that when there's a class action lawsuit, like Robert said, or there's some other catastrophic event that happens, they complain about paying their $500 or whatever it is to the association, but yet when there's a catastrophic event, suddenly they're willing to contribute $500 or $1,000 a month to offset that event. Why not be proactive? Why not be proactive? And actually, you know, if it's $100, it's $100 more that's being committed today. So, you know, you really ought to talk to these guys up here. They have programs and things that they're putting together to try to make something like that happen. So it's much more proactive. An international marketing campaign for consumers is going to be ridiculously expensive, okay? But a lobbying effort might be a little less, but it's still going to be ridiculously expensive because it never ends. Lobbying never ends. As we talked about, people get changed out, new people show up. Every 2 years you get new representatives, blah, blah, blah. It's an ongoing, never-ending effort. So, anyway, I would definitely consider, if you haven't considered, getting involved and having conversations with these folks up here about how to involve yourself in their lives. Even if you don't have the time, involve yourself economically. I mean, it doesn't have to be a lot of money. It really doesn't. If you add it all together and you put the sea of money together that you guys all could contribute to this, it would be so ginormous. There's no way. You could offset a lot of problems with funding and training and education. So I'm going to bring you back to a software issue. Okay. So how many think that every time you print a report in AutoStar, it should just be exactly what you need it to be, and it should always be right depending on what state rule I'm looking at or whatever? 100% of you? Well, let me tell you what. You need to review the data that comes out of this software, okay? We have interpretations that we get of law just like you do. So I'm going to give you an example. In the state of Florida, okay, we've gotten 5 interpretations, 5, and Chuck will testify to this, 5 unique interpretations on how to calculate the DR95B. 5. You can't get a state person to give you a direct answer. They give you very different answers every time. Then they act like the next answer was the right one and the one they gave you previously was wrong. Even though they gave it to you previously and you have it documented with their name on it. So you're only subject to how much research you do in determining what you're doing. Remember, you're filling out these tax forms. It's your contract with your name on it. They're all interpreted. So when we program a contract for you, you know, we ask you to sign off saying, hey, this contract's right. If for whatever reason you're giving your employees access to go modify things, like maybe something like a fee, you've come up with some new fee that you want to charge, and you haven't considered that in the programming of the document, suddenly you got a problem. Because just because the fee adds up in the totals doesn't necessarily mean it's in the right place. And if it's not in the right place, you may be given a refund. And if you multiply that refund times 100 or 500 or 1,000, it can get to be a substantial amount of money. Another thing, just to kind of tell you about forms and rates and things like that. Don't be, you know, don't do things that would be considered predatory. You know, be conservative. Try to be consistent. You know, if you don't give a bunch of varying interest rates, that's probably the best idea. Just kind of keep it all simple. Don't charge everybody the max. You know, because if you have any computation problem, okay, that could be a problem. Dealer in the state of Texas. I'll give you a great example. I'm not going to name the dealer. This dealer in the state of Texas was audited by the OCCC, charging maximum rate, maximum right to the very end. Because, you know, 10% of these contracts pay off, so I need to get every penny. It's a true story, 10%. Okay? So, in that particular situation, that particular dealer had gone in and made some modifications to his number of days in his calculations. So he changed it from a true daily, from an exact days earnings method in Texas, which is how it works, to basically what's called a 30-365 or a 7-364, okay? For bi-weekly and weekly contracts. So he went in and made these modifications, and the OCCC shows up, and he had a usury problem. Now, he wouldn't have had a usury problem. Calculations were correct, 110% correct, based on the inputs that he gave him. If he had just backed his rates down 0.5%, not even that, 0.5%, he would have been so far under it wouldn't have mattered. So just don't be greedy. If you're not greedy, you typically don't get hurt. So if I could give you any advice, just be conservative across the board. You know, the whole hogs get fat, pigs get slaughtered thing. You know, be conservative. Join your associations, give them money, participate in PACs, participate in things, and be proactive, because you're actually protecting not just your fellow dealers, but yourself simultaneously. And you are under attack whether you realize it or not. You don't realize it. Yeah, they're in payday lending right now. Okay? They're going to get to you. Trust me. So, you know, the more proactive you are, and if you don't have enough to worry about, you got plaintiff's attorneys. Thank the Lord we don't have any of those here. So you got plaintiff's attorneys. Although at lunch we're going to have a trial. So, you know, you got plaintiff's attorneys looking, and they advertise on the internet. Have you been wrong to buy a car dealer? I mean, it doesn't take long to find them. You know, I got a customer that is, you know, he's had a couple of issues because the way he likes to disclose information. We've tried to tell him not to do that. Got it in writing saying don't do that. And he may be looking at a statutory lawsuit against him on plaintiff's attorney, and that's treble damages, and that's big, big, big money in his case. So you just need to be very, very conservative about the decisions you make. Okay? That's all I'm saying to you. These guys have a lot of great input, so we're going to continue on instead of you listening to me. I have a question. So if you could name, if you were going to, first of all, you got this summit coming up, this national event coming up. Can you give them the dates? Sure. And explain to them that how they can participate and what they can actually do? Because I think that's something you guys are encouraging, right?
Yeah, absolutely. So the dates on it are November 11th. It's actually Monday of Veterans Day, November the 11th, the 12th, and the 13th in Washington, D.C. It's at the Fairfax Hotel at Embassy Row. It's in DuPont Circle in downtown Washington, D.C. It's a great little cool boutique hotel. But that's kind of ground zero for where everything is going to happen. It's a free event. It doesn't cost you anything except to just get up there and pay for your room, because it's just that important. I mean, a number of things are going to happen that week. We're going to convene our legislative committee to help direct the legislative initiative for next year and beyond, which is something that I don't know that we've done in person in a couple of years. And I know Keith, to Keith's credit, coming in as our president for this year, one of the things that he really wanted to make an initiative on and underscore is a lot of what we're doing in Washington, D.C. to reinforce the relationships that we have with elected officials and key committee members and the regulatory agencies. So we're going to have a legislative committee meeting on that Monday. We've got our association directors and our elected officers are going to go through some different training. And then like I said, the federal regulatory agencies are going to come over and talk about what's happening, including the CFPB. We'll have them talk a little bit about compliance and some of the things that they're thinking about as it relates to looking at our industry. And then on that Wednesday, like I said, we're going to, in teams, go to lobby Congress. We're gonna talk to some guys that are in the auto caucus. And one of the benefits right now is there's more happening on the regulatory side of the industry than there is on the legislative side. So there's a handful of bills legislatively that we're looking at. Fortunately for us, Congress has their hands full with Syria and a lot of other more kind of pertinent issues. But there is one particular bill that we've been watching. It's the Senate. Well, it's in the Senate now. The Senate Transportation Committee. It's the rental car recall bill. And this bill seeks to regulate rental car companies that you have to be a dealer to do that as well. So if you have a fleet of rental cars of 5 or more, you would be held captive to the laws in this deal, which would require you to fix any open recall notice on a vehicle before you put it into service. So you may be thinking, well, that doesn't really directly relate to dealers. It's it's more of our rental car counterparts. But the way, and you guys know how this works. Once they get a foothold over here, then it's just, well, who else can we start applying this to? And the used car dealer would be next. So we've gotten word based on some different amendments that we put forth and lobbying on that this bill isn't really going anywhere for now. So really, tying it back to the leadership conference, a lot of what we're going to talk about with our elected officials is who we are, how we can be a resource for them, and just to build a relationship. And I can't tell you the number of times I've been in a congressional office talking to a staffer. I participated in the National Auto Auction Association Day on the Hill a few months ago, and they took a similar approach. And a lot of the meetings that we had, we'd go in and we'd sit with a 23-year-old staffer who, 6 months on the job type of deal, and we'd say, listen, and they're prepared to take notes. Okay, well, what do you want? What's going on? What do we need to do? And we're like, look, we just want to tell you who we are. We just want to tell you about what we're doing. And we don't really need anything from you right now, but we just want to be a resource for you. We want you to know how to get a hold of us if you ever do have any issues. And we want to be present. And that's going to be a large part of our strategy this November as we do meet with a lot of these elected officials and their key staffers and the committees, is to say, look, we're not really asking you for anything right now, because the time to build those relationships is when there isn't a crisis on the legislative side. Because when there is a crisis and there is an issue, you'll get the phone call. And a perfect example of that is Senator Dean Heller from Nevada. His legislative aide called us 2 months ago and said, hey, where are you guys at on this rental recall bill? So 2 weeks ago, we had a conversation with him and kind of walked it through and told him what the concerns were, what, you know, where we were in the process, but those are the types of things that you have to do just kind of on an ongoing basis just to have a presence. So that's part of the strategy this November, is to do that, but also begin laying the groundwork with our legislative committee to start setting the direction of what we're going to be working on for the rest of this year and beyond. And I'll tell you, one of the other key initiatives is how we can really galvanize the buy here, pay here voice through the infrastructure at the national level, whether it's through a buy here, pay here committee, whether it's through a buy here, pay here fund, or whether it's through, you know, a subcommittee or something. And these are the things that we're in conversations with CAFA and their team about, because look, nobody begrudges the CAFA guys for trying to galvanize their voice to make sure they're heard. But I'll tell you, just as a side note, I think 100% of them are members of the NIADA through their state affiliates. So that, to me, I think is a huge opportunity to begin to work more closely with Michael Thomason and the leaders of CAFA to make sure, because these guys are doing it every day, just like you are doing it every day. You're in the trenches, you're underwriting loans, you're trying to secure financing, you're trying to buy cars, you're trying to make sure, you know, your grosses aren't too high, you're trying to manage interest rates. I get it, and so do these guys, and I think going forward, and Michael T can correct me if I'm wrong, but I think we're all saying the same thing, and we're all doing the same thing. What we're going to try and figure out, and our commitment to you, is over the next, you know, several months, figure out ways that we can all kind of work together so that we're all singing from the same song sheet through, you know, one particular vehicle going forward. Is that a fair statement, Michael?
I would agree with that, yes.
So those are some of the key initiatives that we're working on, again, to galvanize that buy here, pay here voice in the infrastructure that we have through the NIADA, whether it's, like I said, a buy here, pay here committee that reports directly to the executive committee or has its own fund, has its own account, so that we can raise money to throw at an issue as it comes around. Because like what we did in California, you know, we raised a little more than $70,000. We spent about $65,000. I think we've got $8,000 left in that account as a rainy day fund. So if anything else comes up in California, you know, we've got at least seed money to start something there. But those are the types of things that we need to be doing at the national level as well, so that when something happens at the federal level and there's a crisis, we're prepared and we're ready to act. So that was a long answer to your question. I don't even know if I answered it. But.
Well, can they go?
Absolutely, you can go. Go to the website, the NIADA website. We've got on the home page, we've got a slide player. One of the 3 or 4 slides up at the very top talks about the National Leadership Conference. Click on that, you can register. Again, it's free. All you have to do is, you know, get up there, pay for your hotel room, and come and participate. We want you to be involved. We want to hear from you. This is your association. It's not my association. I just have the good fortune of waking up every day managing the association on your behalf. So that's exciting for me because I love it. I love what we do. I understand the industry, and unfortunately, I understand the legislative stuff too. So, you know, it's always a big, fun challenge. So, but please come and make your voice heard and find a way to get involved at the state level, whether it's on a committee, going to your conventions, you know, the legislative committee in your state level, or, you know, call your state association and say, hey, what's going on? How can I be more involved so that I can, you know, make my voice heard and, you know, make the industry better?
Go ahead. You got something to say? Okay. Amen. So, if I had to sit back and think about things like best practices, let's switch gears just for a second. Let's actually talk some car stuff. So, from a best practice perspective, Chuck and Michael, I think I'd like both of you to comment on this. How have you changed or how have your dealers changed or modified any of their closing processes to maybe ensure some sort of compliance or change the way you actually go through the closing process? Have you made changes, Keith? You can obviously comment on this too, to ensure that the message that you're sending is correct?
Well, actually, we do 3 closings. 2 wasn't enough. We had to add 1 more in. You know, the salesman or the manager at the store actually goes through a closing. So one of the things we added a couple of years ago was now that we put in a video closing where they actually go into and watch an 8-minute video of basically just what they got told, but maybe a little more in depth, or maybe to answer some more questions. So if they hear it twice, maybe they hear it. And now, I think within the last year, we actually have them go, or they don't physically go, but they are in contact with somebody at our finance office. And I think most of those happen at the time of the sale. It might be 1 or 2 or 3% that don't happen that day, that happen the next day. But someone in our finance department will actually go through the closing with them again and make sure they understand every bit of it. When, you know, the biggest hang up I think for customers are they're excited, they got a car, let me just get out of here and get gone. And oh, by the way, when is my first payment due and how much is it again? So they go over that all again. They go over all the insurance requirements that are on the contract and make sure that they know exactly how that works. So the 3rd closing actually has made a huge difference. It's a little bit redundant, sounds like a little crazy, but that's about a 12-minute commitment on the rep's part, and it's made a huge difference in the education of the customer. That's really what that's all about, is educating the customer, making sure they understand what they signed. And we catch a few and we change the contracts. It's just it's a better way to handle it with the customer than a month down the road.
Yeah, that's part of my training when I'm training dealers new to the business or those who are struggling out there. And some of it's selfish. I know that good closes lower, diminish, and sometimes almost completely eliminate first payment defaults, which of course is a very painful event unless you're a buy writer and you can just back them out. So easy. But it's funny because, I mean, you know, I actually call it, you know, there's a loan closing at the dealership and then there's a loan opening at my finance company. So, yes, I don't want my sales guys to go through this because I want someone who's in charge, a key individual, to review, and they're given either a word track, a script, a form, something they're going to follow. I know a lot of my dealers will have a form where they can actually initial that they've read it and understood it. The video, I'm a big proponent, and when I had 27 stores, we could not close the loans for my finance company, so we created a video 20 years ago that they had to watch, and my ugly mug on it. That kind of went through it again, and back then we were giving out VHS tapes, but today we would give them those discs as well. And paramount to all that is after the car is gone, 72 hours or more, our reps who own that loan, that's their baby, they're required to talk to the customer again. And say, just want to make sure you have no misunderstandings about what we will do for you and what you need to do for us. And it kind of ties back to something that the JD Bywriter company did, which I thought was, it's a brilliant move and it should have been done. It's the kind of thing that I get a lot of pushback from the dealer groups when I'm trying to train them is, you guys really need to consider a 48 or 72-hour return or exchange policy. The kind of things that no law may require you to do, but I first made a note on here. This is a really important time for us as dealers to go above and beyond the law or the minimum standard. There's too many of us who do just exactly the letter of the law, and it's a really good time to say, when I give a customer the opportunity to return a car if they're not happy, you'd say, oh my God, they're going to drop them all off and take the cars for the weekend. It's been our experience that virtually none do. They bought the car because they wanted it, remember? And so we do this all the time. And so the other thing I was going to add to that, which closing procedures are really powerful to me because I think that's the beginning of collections, is as you're writing policies or your procedures, I would ask you as you're writing them, or if you're amending them or adding new ones, ask yourself, is this pro-consumer, consumer neutral, or anti-consumer before you write it? You just need to think, is this going to put them in a worse position? Because if it's going to be anti-consumer, I would ask you to reconsider.
If I could just
Yeah, go ahead. Yeah.
I think Chuck raises a hugely appropriate point. When I was a dealer in Tallahassee, which is the capital of Florida, we were hugely mindful. We were hugely mindful because we're right there in the backyard of every government seat in the state of Florida, to dot our I's and cross our T's. But inevitably, there was one senator that once a year would float the used car limit law. And I remember several years ago reading through this thing and thinking, well, philosophically, we don't want this law to pass because we don't want government to tell us how to run our businesses. We want to be able to run our businesses the way we see fit, to make a healthy profit, to make our margins, to employ people, to give back to our communities. And we don't want the government coming in and telling us how to do that. But if it did pass, I'm okay because we're doing all of this stuff anyway that they're asking us to do. Not only are we doing everything, but we're doing it probably 3 or 4 times more than what the law, if passed, would require. So, as a matter of best practice, I think, getting back to Alan's point, if you're a dealer, a buy here, pay here dealer, the single biggest question mark that looms over any legislator's head or any regulatory agency's head is this. You're a buy here, pay here dealer, you charge 21% interest, you're making money on the backs of poor people. Well, no, I'm not. I help people get to work. I provide a warranty. I report to all 3 credit bureaus. I finance people who can't finance a hot dog. I'm doing all of these things, and I'll just tell you, the way it translates into the regulatory and the legislative environment is, you're a loan shark, you're making money on poor people, you deserve to be put out of business. And that's just the unfortunate reality. So, to Alan's question and to Chuck's point, you have to be proactive in how your methodology and your business is established to look at what are you doing for your customer? What steps are you taking to make sure you are taking care of your customer? Are you giving a warranty? Are you reporting to the credit bureaus? Do you have a related finance company? Do you have a return policy? What are the things that when somebody starts poking around your business and says, oh, well, you're just making money off of poor people, you've got an answer. And I can tell you the answer is, well, no, we're not. I mean, that's not the right answer. You have to be very clear in your objectives to take care of your customers.
Yeah.
But anyway, to add to that, I think the processes are very important, but it's also letting all your team members and all your employees know what your processes are, because we can sit in here and know exactly what we're doing, but then you go back home and check and you find out you're not doing it. It's funny, I was talking to Ingram Walters not too long ago, and he said he was working on his process manual. And when he was going through it, updating, he hadn't updated it in several years. He said, well, I'm glad we're doing that. And they said, Ingram, we haven't done that in 3 years. And he said he'd go through something else. And they said, we haven't done that in 2 years. So I think it's important that we know that our people are doing what we think they're doing and expect what we expect on our people. I remember years, way back in the business, the number one rule is never ask the customer about the car. That was the rule. Don't ever ask about the car. That's the first rule? First rule, yeah. Don't ever ask the customer about the car. And I think we have come this full deal now to where our people and our team members need to know when there's an issue, somebody needs to be alerted. And so we need to ask those questions, and if something is coming up, that they're not just trying to handle it right there, and, oh, I took care of that customer, and then you find out later that's not the case. So I think that's where it goes along with your processes, and have a process for everything, and making sure that those people are following those processes. So it's just very important, because you never know who's going to come to your business, who's going to make that phone call. We just went through that with our 20 group where you listen to the phone calls, and sometimes it'll scare you to death. Because you think it's being done one way, but it's being done another. So that's just very important.
Well, and I don't know how much time we have, but I want to say, just kind of in retrospect, listening to everything that we talked about today, there's really kind of two layers to this conversation that we're having. One is a compliance layer that you need to, as a dealer, be vigilant in to make sure that you are compliant, that your employees are going through a compliance, training, whether it's a manual or videos or whatever. You got to be doing something. But secondarily, the second layer of the conversation is, how does that translate into regulatory activity, legislative activity, and what kind of long-term effect does that have on your business by the absence of compliance or not participating in compliance? So I would simply say, and we haven't really talked about this, but I will tell you, the NIADA has been working over the last 6 or 8 months to put together just a basic compliance module that dealers around the country, anywhere, in any state, it's all federal compliance training. It's been vetted by a number of automotive attorneys to make sure that if a dealer is wanting to just get started, wanting to just look at, well, where do I even start? We've created the NIADA dealercompliance.com, which you can go to our website, you can find it, NIADA dealercompliance.com. It's a series of video compliance modules that at the end of every video, there's a quiz that you can take that captures all the information that you just learned in that video. You as a dealer can do it. So we cover things, I think there's 13 different modules. We talk about OFAC, we talk about red flags rules, we talk about risk-based pricing, we talk about OSHA, we talk about all the stuff that you hear, we cover it online. And as a dealer principal, you can go in and you can take the quiz and you'll have a certificate of completion that shows, hey, I went through these different modules, it's an NIADA endorsed deal. You can see that I've gone through that. And you can put up to 10 employees per rooftop under this compliance training. So if you've got 10 employees in your dealership, each one of them can go through that same deal that you just went through. So you can at least start the conversation. It's a great way, if you're looking for a way to get started, you can at least start there. And certainly there's a number of other good opportunities out there with Hudson and Cook and different attorneys that can help you get started on compliance stuff. But if you're looking for a way to get started, you can do that. Additionally, so that's the first thing, you gotta be compliant. The second thing is you gotta be involved. You gotta make sure you're participating in your state association. You gotta, come to the leadership conference that we're having in Washington, D.C. And it kind of speaks, like I said, to both layers, the compliance layer and the participation layer, by making your voice heard, by getting involved in your association and finding a way to be more active.
Any questions?
What's that website again?
It's NIADA dealercompliance.com.
Do you have a question? I can't tell. Did you raise your hand? No? Okay. You're right in the light. Okay. I got a question. So, what is the single best decision? Hey guys, focus. What is the single best decision you've made as car dealerships? I mean, you guys have been in business for 100 years. So, what's the singular? We were talking about this a little earlier. I mean, what's the single best decision you made, and what's maybe the single worst? You can think about that.
Start here.
Yeah.
I think my single best, honestly, was getting in a 20 group. And then my worst mistake was getting out of a 20 group. Now I'm back in a 20 group. So I'm not going to make that mistake again. Friends sitting in the back got me back in. Told me I was fat and lazy. But anyway, the thing is, man, when you're in a 20 group, you're around guys that are sharp operators. You spend 2 days or up to 3 talking about ideas and going over things and what's going on in the industry, talking about compliance issues. We cover it all. And man, to have that, 3 to 4 times a year, it's priceless. So that would be mine.
Okay.
Yeah, I think that would probably be the #1 answer of most dealers is joining a 20 group. Thank you very much. No matter which 20 group there is, what company might be.
It's supposed to be under the table.
We're not proud. Did you say we're not proud?
Take it where I can get it.
That's funny.
That's probably be the #1 answer for most dealers. The 20 groups are, most of you are probably in 20 groups. You know what we're talking about. They can be very humbling, because you're probably not ever as good as you think you are, and you're not ever as bad as you think you are either. So it's great to have those measurements. It's great, the camaraderie that you get in there, but you are bearing your soul, and sometimes that can get not a lot of fun sometimes, but it is a slap in the face of reality, and it certainly will make you better. And I don't know about the worst decisions. Maybe joining the 4th one.
I'll just share one. I think it's a funny story because obviously everyone always says that, and every time I do these things in our shows, people say the 20 group, and I know a lot of dealers say I'm not ready for one, I'm just starting out there, and I will tell you, whether it's through NCM or NIADA or through us, there's nobody better than people who are living your life today. And some of the things that it's good is that we can share the successes of our other fellow members, and sometimes we watch failure. And there's some lessons in both of that. But my story goes back to 1996. We were just about to go public at the time, and a guy from NCM called me up. Really, my brother-in-law Gary called us up to say he wanted us to be in one of these 20 groups. And as a typical Florida dealer, we were way too smart to want to be in a 20 group. And I really wish I had my numbers back then, but I can assure you we would have been on the far right of a lot of pages, which in our groups means worse performance.
All right. Well, if you don't have any more questions, we're going to end. So if you don't have any more questions, thank our panelists. They've given their hard-earned time.